Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Wednesday, October 11th, 2006. And I've got the semiconductors right up on the screen right now. This is a daily time frame for the SMH. And the market broke past that little symmetrical triangle that we've been looking at here over the last week and a half, 2 weeks, as we've noticed its development here. And more impressively, was able to get above that 3460 level. Unfortunately, though, it wasn't able to close above there. I said yesterday afternoon that I was thinking about buying some calls in the semiconductors, and I did buy those calls and thought they were looking pretty good when I got into them right about here, and I ended up bailing on them, taking a very small profit, but you know, it would have been a lot nicer to see these things close above 3460 really is the number that I'm looking at. But I don't think there's really there's definitely no damage done in here. Right now, I think that 3430 is where we're going to have to hold above. But on the daily time frame, it's a little disturbing to see that it tagged that 200-day moving average almost precisely, and that's where we found the resistance today again. So that 200-day moving average is going to continue, it looks like, to be a little bit of a problem here for the semiconductors in the short term. And again, we've got, you know, I think we'll be okay as long as we hold above probably that 5-day moving average. Actually, probably about 3415 or so is what I'd be looking for as the better level of support in the semiconductors, just for the short term health of the market. The spiders, let's take a look at the SPY, held up again, you know, very nicely. We had our first real quick sell-off here, a little bit of fear in here today based on some news. I guess the Fed minutes maybe were released or something like that. And the market came down through that 5-day moving average, but closed right on it again today. And yesterday I was saying that I thought support was about 3470 to 3480, and that's about where it came down to as well. And if you look at a short-term time frame, let's look at a 2-minute time frame. I'll put the pivot lines up there. You can see here that it was right near the daily S2 that the S&P 500 found support as well. So it shows me that there is a little bit more fear maybe underlying in this market. We've still got that resistance up near 134.50. I'm sorry, 135.50. I was listening to yesterday's video too. I just kept butchering the prices here, but this is 135.50 up here where we definitely have that resistance. Now today was the third test of that level here recently, and it backed off pretty hard from there. Realistically, the best level of support right now is down here at 134.50. So kind of range bound, right in the middle of that range. The market's still in an uptrend, so I'm going to say innocent till proven guilty. We can draw a trend line like this, and it says, you know, we're up towards the top of that trend line, but it doesn't mean that the market will roll over. I think there's a lot of people looking for short opportunities. A lot of people probably threw their stocks away down in here, but the market made a very nice recovery here at the end of the day, and that's really what I think was the main point to take away from this session today, was the market did recover. Now it's still, again, it's stuck in a range, but the buyers are still out there looking for an entry, it seems. So let's not be so quick to throw our stocks away and look for shorts, because there's still buyers in the market, and maybe these are the short sellers who are trapped and just looking to give up their position. The Nasdaq 100 Trust, the QQQQ, was able to push out to a higher high, and I think that was probably when the semiconductors were making their high as well. I wasn't really paying too close attention to this today, and I've been focusing on 4120 as the support level, and you can see the market came down and tagged that precisely, and also was able to rally back up and close above that 5-day moving average, the rising 5-day moving average. But we did make a lower low as well, so it's kind of telling me that even as the market's been rallying, we've been cautious over in here the last couple of days, but a lot of the stocks have been rallying, kind of 10, 15, 20% in a day. And once it starts getting that easy in the market, it's time to start being a lot more defensive and start thinking about protecting your gains. And I think that's probably what a lot of this sell-off was exaggerated by. Is a lot of people said, "Hey, well, we've been stretching this rally here. Let's just lock in some stuff real quick." I know I did the same thing. Like I said, I got out of those semiconductor calls. I sold a bunch of other stuff too, because I like when the market turns uncertain and we get this bigger volatility like we're seeing in here. It's George Soros who says, volatility comes at turning points and diminishes with the trends. So when I see this volatility, I start thinking, hey, cash is a position here. Let's let the dust settle a little bit, see which way this market's going to shake out, and then redeploy or continue to trade, but smaller share size and be very quick on the trigger to exit. The mid caps MDY. Let's take a look at the daily time frame again. The focus here, the primary focus is that 200-day moving average. Looks like it tagged it intraday again, and the market was able to once again push through that July high, but it wasn't able to close above there. And again, no reason for concern. We've got the rising 10-day moving average above the rising 20-day moving average, above the rising 50-day moving average, and the market holds above that 200-day moving average. So there's no reason to think that these mid caps are about to tank or anything like that. The best level of support really is going to be most important level of support is about 138.70 or 138.80 up to about 139. Breaking below there, I think then we want to be a little bit more concerned that maybe this breakout could be setting up a failed move, and as we know, from failed moves come fast moves. There's no evidence of that yet, just something to keep an eye on, keep our eyes open just so we're not caught off guard at any point.